Good afternoon, everyone. Thank you very much for attending today. Um, we were live on YouTube, and we'll just wait a couple of more minutes before a few people log on further. So just a minute or so. Okay. Today's webinar is on national insurance contributions to the UK, and generally from the point of view of an expat. So if you're living overseas or lived in the UK beforehand, then you may have built up some kind of national insurance record. You may want to contribute to it. You may want to find out what it is and then what that entitles to you, mainly state pensions or pension on retirement. So that's really what we're going to cover. A series of different events or webinars that we do once a month on different subjects. So they're fairly short in that there'll be 15 minutes in total, and in that time you should be able to learn a couple of key points that you can take away. If you find anyone that you think is would like to listen to this or like to watch it, then please feel free to forward on the YouTube link or pass on their details, and we're happy to discuss it further with them. So let's just get started. What are the national insurance contributions? Well, they're not really an insurance. It's more of a tax, and it's a contribution to the social security system in the UK. It's normally based on qualifying years, and if you have a qualifying years, then you're entitled to certain benefits. Obviously, one of those is state pension, but there are other benefits that which you can be entitled to, and to a certain extent, it is the entitlement to using the National Health Service as well. So it is important to see if you've got what your record is and how much is in there and what you're entitled to. The HMRC carry out the collection and they carry out the administration. So that's your point of call. So if you're going to be paying into it, then you're going to be paying to the UK HMRC, and their website is really where we got a lot of this information from, and it's incredibly in depth, and it does have all of the questions that we may not have covered today on there. The key to national insurance contributions is your number, and probably at age 16 you would have received one of these cards, the blue and red one. The format is the same, 2 letters, 6 numbers, and then another letter, A to D is normally what it is. And this is the key to finding out your record. It's also the key to your pension in the UK. This is the number that is always used, so you need to know what this number is in order to find out more information about it. You can write to the HMRC and they will give you the number if you're unsure of it, but it would have been on old pay slips, it would have been on a pension statement, because this is the number that always gets used. Now, there are 4 main classes for national insurance contributions, and they are different, and you can contribute to different classes depending on what your circumstances are or where you are. So if we quickly run through them, the first one is class 1, and this is what probably you would have paid into if you were working for an employer back in the UK. You'd have paid some as well, and it's based on percentage, probably around about sort of 12-13%, and depending on what your position of your employer was, and this would be adding to your record. There's also class 2. So if you were self-employed, there was a flat rate. So it's class 2 contributions, and we'll come on to those later. And then there's also class 3, which was voluntary. That was also a flat rate. This is generally for non-working spouses, or if you wanted to contribute because you missed a few years. Class 3 was the one that gets used. And then there's class 4, which is a percentage rate for self-employed. The recent budget, the Chancellor said that he'd be putting up this class 4 rate, and then subsequently decided not to. So that's what that was talking about. Class 2 and class 3 are the ones that are relevant to expats or people who are overseas. So those are the two that we'll cover today, and those are the two that you have to decide whether you contribute to or you pay back. And it's just understanding what your circumstances are and whether you fit into either class. So class 2, generally self-employed person over the age of 16, that's what they would end up paying. It's a flat rate. It's paid by the self-assessment system. So out here, you need to log on to the self-assessment system where if you've got, say, property back in the UK and you're receiving rent, then you're likely that you'll be paying tax on it. And this is the facility to do that. You pay your tax in January or July, but you're going to submit it by January. As I said, flat rate, not earnings related, and you can make voluntary contributions for previous years. And this is how much it is. So it's relatively cheap, £2.85 per week, or a maximum of £148 per year. Class 3, again, voluntary contributions. And as I said before, it's really for non-working spouses that this class gets used. And similar circumstances to class 2, you're paying into it, you can make voluntary contributions, etc. You can make up to 6 years back pay. There is a extension on that at the moment, which we'll come on to later. But this is the cost of it. So it's more expensive than class 2, so £14.10 as opposed to £2.85, 733. If you go back previous years, then that number will change. So every year it gets more expensive each year. So a few years ago, probably about 500 or so. But when you write to HMRC, they'll give you the breakdown on how much it costs each year to do. So class 2 or class 3, what is it? Class 3 is for living and working abroad, but only if you've worked in the UK immediately before leaving, and you had 3 years in a row or paid 3 years national insurance. What about class 3? That's for living abroad but not working. Similar circumstance here, if you have to live in the UK for continuously for 3 years or pay 3 years contributions. So the two really is the case of where you are now. If you're living and working abroad, you pay class 2. If you're living but not working, then you pay class 3, which really comes down to effectively the non-working spouse scenario that you get on class 3 if you're in the UK at the time. But what is it? I mean, what does it entitle you to? So class 1, class 2, and class 3, you can see the list. And this is from the HMRC website, so it's freely available. The main one is obviously the basic state pension, or the new state pension. Is really why people overseas want to contribute to national insurance. There are some other benefits, bereavements, maternity, etc. But you're only really going to get that if you're a UK resident again. The UK state pension is the one that everyone wants to talk about, so we'll go through that now. It's basically a regular payment from the government. Depends on, you can be anywhere in the world to receive it, but it is based on your national insurance record. So you need to have a full record. We'll come on to how you do that shortly. And then the pension age depends on your state of birth. 65 is likely to go up to, it is going up to 67, and it's likely to go up further in the future, I imagine. It does increase every year. The government put in called a triple lock. So it's higher inflation, earnings, or 2.5%. So it will increase every year in line with effectively inflation. How does it work? Well, as I said, based on individuals' records, that's how much you're currently going to receive, so £159 per week. So if you're doing some further planning about your retirement and you want to know, well, how much do I need on retirement? You say, well, if I have a full state pension, I'm going to receive in today's value £8,000 per year. Then I can obviously say, well, in X amount of time when I come to retire, If I need to take 12,000 per year, then I only really need to fund 4 because the state pension will pick up 8. So it's crucial in terms of your cash flow forecasting and understanding some retirement benefits. So I think it's really the basis of planning for retirement, especially as an expat, because you can access it very easily and you can make contributions into it that are relatively inexpensive. You do need, however, 35 years to qualify. And you would have got credits if you were in higher education or maternity or unemployed, and obviously when you were working. But it does depend on the type of contributions they are. For the new state pension, however, you need at least 10 years. So that's the new one that came into play last year. The amount you receive increased, but also the number of years increased. So they're now saying at least 10 years. And then up to 35. So if you had 25, then you get a percentage of, say, that 159 based on the number of the years that you have. In some circumstances, the spouse or civil partner can get credits on their state pension as well on the national insurance record by being a non-working spouse if they're not contributing to class 3, as we talked about earlier. What's a qualifying year? Well, effectively, it's April to April, and it's you making a payment to the HMRC either through employee contributions or the voluntary contributions, and obviously credits as well. And then the calculation is on your new state pension is that how many years you got depends on the percentage of the amount is every week. So it's pretty straightforward to work out. Once you get the record back. Now, overseas matters, as I hopefully imagine the majority of people listening to or watching this are living overseas, it's what are the factors that will make a difference to you? You'll get the state pension anywhere in the world. You will not get the annual increases though, unless you work or unless you live in certain countries or the economic area or the European economic area, or Switzerland or a few other sort of random countries. So it is important to know that you're not going to get that triple lock that we talked about earlier a few slides ago, and we're not unsure of what the circumstances will be in the future. If the UK leaves Europe, then whether or not these increases will happen, you can speculate, but it's difficult to say what the outcome would be. There is talk of getting the increases for everyone outside of the UK, but that's a motion that is going through Parliament, but I imagine it's put back at the moment. There was a High Court case a number of years ago in which the pensioners who were appealing for it lost to the government. So we will see what happens at that in the future. But it is worth taking into account if you're going to live overseas. What about making voluntary contributions, which is really what I think everyone really wants to know. If you haven't got enough of those years, the 35 years, and you want to make contributions, then how do you do it? Now, as I said before, the HMRC have extended the deadline, so you can actually make contributions back to 2006. So all of those years before, rather than just the 6 that normally happens, and this is extended to 2023. Really is a case of the change in the state pension. We realised that some people might miss out just because they haven't built up a number of years. So 285 or £14 for class 3. And how do you do this? Well, the first thing is to find out what your record is, and you can do this online or through paper application. If you're doing self-assessment forms already because you've got rental income in the UK, then you would have a government gateway. And if you go onto that government gateway or you register for the government gateway, within that menu, there is a check your state pension or check your national insurance record, and then where you can pay as well at the time. So that's very important, just to look that initially. If you're unsure and you want to do the paper ones, then there's these are the links to the paper applications. Confusingly, there are two different ways to do it. You check your state pension, you check your national insurance record. The state pension is based on your national insurance record, but you can actually check both options. And the national insurance form is a NI 38 and the other one's a BR 19. So those are the links if you want to do it. But I would start with the online version first. Remember, you need your national insurance number first, and that's the key to looking and seeing what your record is. But if you do log on, this is what they're asking for: your email address, when you were first tax year, when you left, and everything else. That make sure you got the information at hand when you do so, and then they'll write back to you and say, this is your record, this is how much you're expecting to receive as a state pension, and if you want to pay back, this is how much it's going to cost you to pay back the contributions for each year. They're going to be different, they're not going to be a set amount, and it's whether you come under class 2 or class 3. And then going forward, how to make voluntary contributions in order to build up that 35 years. So in summary, check your insurance record, check online at these areas, make sure you get to 35, check whether it's class 2 or class 3. But really it's to look at whether or not this is part of your overall financial planning or the cash flow forecasting. So that's really the reason why you're doing it, is to say, well, how much do I need on retirement? How much can this come from the basic state pension? Can it come from other pension schemes? Can it come from a savings? Can it come from property? And you're trying to get to that figure that you want. So there are a few. Just had a quick question here. If I'm not familiar from the UK, but I made class 2 NI contributions, class 3, can I still make contributions? You can make these contributions if you were living in the UK for 3 years continuously. And that's really the key, because you would have got a national insurance record, so you can actually go back even if you're maybe not a UK citizen or a passport holder. So it is possible to do that. So of course, use the question and answer session if you have any questions that you want to ask at the same time. If you're unsure and you want someone to do it for you, then we'll charge a $100 fee just to do the paperwork for you. It's free for clients, so become a client and we'll do it for you for free. But it is quite a straightforward process. It's just whether or not you want to go through that. Looking online initially and signing up for that government gateway is the first instance, and it's pretty simple to do. Of course, if you're unsure, we're here to help. As I said, it's all part of the planning, and it's important to work out what you have in retirement and where effectively these multiple streams of income come from, and the state pension is one of those streams. So it's important to use it. Any information, by all means, get in contact with me through the various different ways you can do. I run a personal website which has a lot more information about this and other financial planning aspects. So by all means, go on there. Otherwise, just give me a call and I'm happy to go through it. But thank you very much for listening today, and hopefully we'll be in touch and speak to you soon. Thank you very much.